We're moving back to Japan. The Bank of Japan goes above zero.
Yeah, so we have talked about Japan extensively before, and the Bank of Japan has kept their version of the Fed funds rate. They call it the immediate interest rate, which is their version of the overnight rate, the Fed funds rate. They've had it at, around, and actually below zero for the better part of a decade and a half. It's actually been below zero since, I want to say, 2015. They've had negative interest rates. This is completely insane for 9 years to have negative interest rates. What's happened is the Japanese government has run up debt of somewhere in the neighborhood of 260% of GDP, their gross domestic product. That is an enormous number. And the reason they were able to do that is because their cost of funds was so low, in some cases, actually negative, right? Well, the other side of that is we've had a massive carry trade. So what people have done is they have sold Japanese bonds, which were yielding right around zero, used that to buy US treasuries, which were yielding something higher. They captured the interest spread. It's called the carry trade, and trillions of dollars have been put into that. Well, what happens when people are selling the yen and buying the dollar? The yen collapses. And over the last couple of years, the yen has gone from 102 to the dollar to 151 to the dollar. That is a 50% collapse in the value of the yen. Finally, last week, the Bank of Japan, after much hand waving, said, okay, we're going to go above zero. We're going to go above zero. We're going to go above zero. And then they finally did it. And they raised their immediate interest rate, their version of the Fed funds rate, from negative 0.1% to a range of 0 to 0.1%.
Remarkable. And so my question on that is you're talking about such a slight move, right? What was the point of it? Was there a point of it? Did they get the reaction that they wanted? Was it window dressing? Doesn't seem to be like it made much of a difference.
Yeah. So the reason they did it, it's not because the Japanese government wants to pay more in interest expense. They can't afford it, right? If they raise interest rates to anything resembling a normal level, it'll blow out their budget, right? Imagine, running up a huge credit card bill, and then, the credit card company says, hey, that 0% rate we gave you for 6 months, now we're going to start charging you 20%. All of a sudden, that credit card bill is going to become huge. That's what the Japanese government is facing. So you're asking, why did they do this? Why did they raise rates? The simple answer is because the yen had slid from 102 to the dollar to 151. They're doing that to protect their currency. They need to do this. It's very important in Japan. Japan is a huge economy. It's the world's fourth largest economy, but it's also a small island nation without a lot in the way of natural resources. They have to import almost all of their energy. Energy is typically priced in dollars. And so, for everyone listening to this, think about how frustrated you are when you go to put gas in your car, you fill up your tank, and the bill is high. Now try to imagine doing that with a currency that's depreciated 50% against the dollar. It's a problem. That's why the Bank of Japan raised rates. And they were so timid about it, right? They were doing it to protect the yen, but they were so timid going from negative 0.1 to 0 to 0.1 that the market laughed at them. And instead of protecting the yen actually fell on the day. It was down, a fraction of 1%. But this action that the Bank of Japan took to shore up their currency actually had the opposite effect, simply because people said, okay, we see you're not serious, and we don't really care if your reference rate is negative 0.1 or positive 0.05%. We're not buying it. And they didn't. They sold the yen more.